many times the bank are quite open about the fact their unemployment forecasts are not very good. You'd think they'd do something about it, really, wouldn't you, with all the PhDs that they've got at their disposal. But this sub-report is going to adopt the Proponomics analytical framework, critical, asset-focused, sceptical of official narratives, and this will help dissect this 2025 December decision. We're going to scrutinise the logic of the dissenting hawks, dismantle the assumptions behind the failed unemployment forecasts, and map the implications for the UK property market, from the pricing of interest rate swaps to structural shifts in the UK private rental sector. Furthermore, we'll assess the probability of future rate shocks, including the resurgence of Trumponomics and global trade fragmentation, to determine whether this rate cut is the dawn of a new easing cycle or a temporary reprieve in a volatile decade. So what about the anatomy of the split, this 5-4 vote and the Hawks' dissent? It's the most significant signal that it was 5-4, realistically, arguably more important than the rate cut itself. It's a strange thing when you think about it. It was nearly guaranteed we would have that rate cut, but it was also nearly guaranteed the vote would be 5-4, which tells you more about the makeup of the committee. If there was one more hawk and one fewer dove, definitely would have been a hold apart from anything else. But there isn't. We've got who we've got on the committee. Lots of thought goes into that, and there's a deliberate balance that goes into it, but it's never going to be perfect, right? But this indicates the MPC is operating without a unified theory of the current inflation dynamic. They can't agree, right? So to understand the future trajectory of rates and by extension mortgage pricing, we must understand the arguments of the 4 members who voted to hold.